Good morning and welcome to Sunset Strip Realty. My name is Louis Pizzini. I'm the broker of the office, and what I'm going to be going over today is how do I understand income property. You know, we sell income property, 4-unit, 8-unit, 10-unit, and it's always confusing to a lot of people. How do I figure out if this is a good deal or is a bad deal? Am I going to be, am I getting the return that I signed up for? Okay, so I'm going to put up here. What I'm looking for is basically income property, and what's called it's called a cap rate. So I want to find out what the cap rate. So that's a capitalization rate. Normally, I would say across the board, most investors are always looking for a 5%. Now that could go, higher. It could go lower. So depending on the area that you're in, let's say Beverly Hills, we're in Los Angeles. This could actually be very, very low. It could be a 4, it could be a 3, it could be a 2, depending on the building, depending on how it's priced. So what I've done is I pulled out 2 new listings that just popped up in the market, and I'm going to kind of show you what we would do or what I would do when I start looking at a property. Okay? Because on my what's called a setup sheet, I'll have all the information of the property, but most of the time it's not really accurate because it's based on the current owner, and that's not going to show me the true numbers if I buy the property. So in this case, the asking price is $3,160,000. Okay, so what I'm going to look at is this something I even want to bother with, because it may not be something of interest. And what I have here is that they'll say the gross income is $119,316. So the first thing I'm going to do, one of the things I'm going to do is I'm going to check with the listing agent or with the owner to find out how is this made up. So right here I know that there's 6 units, right? So this is obviously going to come up from rents, or they have a laundry machine or anything that generates income. It's going to pop up here. So one is I'm going to ask for the rent rolls. I'm going to find out, what exactly is it. And then I'm going to check to see if this is basically based on a full house. In other words, there's no vacancies, or does it have a vacancy factor? So vacancy factor could be a 3%, could be a 5%, could be a higher percentage. I like to use number 5. Now, if I see that there's a huge vacancy ratio, normally that's because there's an issue with management. Maybe the manager's not doing his job. Maybe they lost the manager. That happens sometimes. So I'm going to base myself on this. So let's say they tell me the rents are, this is going to be based on a full house. This is based on these units being occupied all year long. So I would say that is not realistic, because I will have some movement. Somebody might get evicted. Somebody might move. So I could use, let's say I use a 5%. So from the 119, I'm going to get to 119, hold on, 119,316. I'm going to multiply that by 95. So that's going to give me, based on my vacancy ratio, what I believe is a little bit more accurate. So it's going to be $113,350. Okay? So I'm going to start using this number instead of their number. Okay? Now the other piece is that they've given me expenses. So they said, on this unit, for this property, we have a expense of $36,504. So that should be my expenses on an annual basis. Now the same thing happens with this number. This is based on their number. So what I want to find out is, on this, how much of this is maintenance? I want to ask, who's doing the maintenance? Is it a company that's doing the maintenance? Is it a relative that's doing the maintenance? This is crucial, because many times you're going to have owners that do their own maintenance, and I need to know, what exactly is being done and how much it would cost me to have the same work done. If I have an outside vendor, it's a lot easier, because I can just basically base myself on the receipts and everything that's going on and labor. So I want to find out, okay, where does that come from? The other piece I'm going to look at is all the expenses, but I'm going to see utilities. What's the common areas? How much am they paying the utilities? I'm also going to look at insurance. Insurance is a big deal as well. You know, many times when you have an insurance carrier on a building, since the time you've owned the property, your rate's going to be very competitive. So I need to do my own homework and find out how much is current, what would be a current quote for a building if I get, you know, the building package. And what I do on this is that either call around different insurance agents, or what I'll do is I'll ask if they'll give me the information of the agent, which you should always ask, and get the agent to re-quote it. So it probably will be slightly higher. Okay, the other piece that I'm looking at is taxes. What happens is that when they come up with this number here, the gross expense, is normally based with their income tax. I'm sorry, with their property tax. And that's not accurate at all. So depending on when they bought the building, that could be totally off. Okay? In LA, we use on sale prices 1.25, you know, on this, and that's going to give me my income, my property tax rate. So going back to this might mean that instead of being 36,504, maybe my expense is going to be 46,504. You see what I mean? And that's going to make a huge difference as well. You know, what is the rate? So I'm going to look at this right now. I'm going to say, okay, fine. This is 46,504. I'm going to get I'm going to get this number here. All right, and this is my expense based on my calculations. 46,504. Let me erase this to make it less confusing. Okay, and I'm going to do 46,504 is my expense. Now I'm going to see what my net income is, net operating income. So I got 113,350 minus 46,504. So my net operating income is 66,846. Okay, and what you have to start thinking is that if I'm going to plunk down $3 million, and all I'm going to get is 66,846, doesn't look like something I want to pursue. Okay. So anyway, I'm going to get this and say, okay, 66,846, and I'm going to divide it by the asking price or the purchase price. Okay. So what I have here is that we have a cap of 2.1, which is a pretty low cap. I mean, this is something that, you know, I don't know of anybody that would jump into this just because it doesn't make any sense. You can get a lot better return, you know, on any other type of property. But see what I mean? This tells me what it is. And that's an accurate number. There's numbers might reflect a little bit higher, just because, you know, like I said, they haven't considered all the expenses, and the income might be off as well. But that's how I determine what the value is. So if I want to entertain this if I want to entertain buying a building like this, what I would look at is say, okay, fine. What is it the rate of return what kind of rate of return do I want? You know, this particular building is in Beverly Hills, built in 1948, prime location. This building you could build condos on. So this might be something that maybe an investor will say, well, you know what, I'm going to sit on this property, and even though I'm not going to make any money on it, the plan is 4 or 5 years from now, we'll start construction and build condos. So that's why it might make sense. But you might say, you know what, I want it to at least give me 3.5%. So based on this, in order to figure that out, what I'm going to do is I'm going to get the gross income here. I'm sorry, the net 66,846, and okay, let me just double check this real quick. Divided by what I'm going to do is I'm going to divide this amount, right, the 66,846, which is my net income. I'm going to divide that by 3.5, which is the rate of return that I want. Okay, so if I get 66,846 and divided by 3.5, that's telling me that I could buy this building for 109, and that should give me the rate of return that I'm looking for. So What this essentially means is that, okay, if this is what I want, this is what I'm going to offer, and then you start negotiating. You know, maybe you'll go for a 3, but this is where the numbers have to be in order for it to make sense at 3.5% or whatever you want, 4 or 5. But that's where the negotiation starts, and that's where you're going to basically talk to the other agent or to the owner and document what you're showing. You know, this is what it is. There's no hype. So hopefully this helps you understand a little bit more in terms of the buildings that are out there. How do I break it down towards income and expense? Because that's going to make the decision whether I want to jump on something or I don't. I had shared in another video that most of the time you will see a much lower cap rate on properties that are in high income areas. You know, Beverly Hills, Brentwood, Santa Monica, they're always a little bit higher. It's a lot harder to get anything above 5. It's tough to get 5, but they're out there. Properties that you'll see that they go up to 8.5 or 9 or 10. Typically, you know, they're a little bit more risky area. There's a lot more volatility in terms of the tenants. These are buildings that typically will hold the tenant for a while, which you might want or not. You know, it depends on you. And that's it. So, you know, if you have any concerns, you want to sell a building, you want to buy a building, by all means, give us a call, shoot us an email. Be more than happy to go over with you and just kind of give you our insight in terms of what the numbers say, and you know, hopefully write some offers and get you some in your portfolio going. Thank you so much. Okay.